Our free info kit, and you'll see why a gold IRA can help you. There are no strings attached. Text the word faith to 989898, and you're going to be blessed by taking action right now.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Seems like it's been forever for some reason. A lot of stuff happening this week. There's always a lot of stuff anymore. It is mind-boggling. Talk about difficult to keep up with. Holy cow. Oh, anyway, I'm just glad it's, I've been doing this for as long as I have because I can't imagine these young people having what they have to go through just to even find out what they need to follow. And it is mind-boggling. As far as the financial markets, they didn't really change all that much over the week. Pretty much a pretty decent week. S&P was up just a little bit over that time period, and didn't have a big crash. You should probably enjoy these times. August, September are normally the slower months in the stock market for the entire year. And so you know what happens in October, November, December. Actually, that quarter typically has the when it's been a good year. If it's topping a good year, you'll normally get a huge move in stock prices. So I don't really anticipate that. A lot of the advice and a lot of the Bloomberg material that I'm looking at, everybody's kind of semi-optimistic, so they're not super pessimistic rather. But they're not overly optimistic, and that's fine. You know, it's actually everybody's kind of. I guess if you really, the best term for this would probably be a balanced opinion, kind of like a balanced fund. You got some people thinking, hey, there's some things that could happen that would be negative. Others are going, yeah, but there are a lot of positives going on, and there are a lot of positives going on. And that's one of the things that kind of bothers me about the news is they focus on just the negative. And by the way, that it's always been that way. And because negative sells ads, it gets your attention. And in order for you to see the ads that make all these sources of media viable, they got to get your attention. So you're going to go to the more negative story. They're going to push the more negative narratives just to be able to get your attention, because they need to get us. The more attention they get, the better more easily they're able to sell their ads. And that's basically how that works. It's mind-boggling. I remember back when YouTube first came out and Google didn't own them. I remember thinking, oh my gosh, anybody can get a camera now and put together your own shows, movies, and that is going to be awesome. Of course, then the stock came public, and it was already priced in perfection. What that means is the price was so high, it was anticipating that there was going to be a lot of growth, and there was a tremendous amount of growth during that time period. So they were right, but there was not a big opportunity to make money with the stock because the stock had already factored in all the growth that they were going to and did achieve over the first few years. So another one of those instances where it's a great idea and everybody already knew about it. So very difficult to get a good deal when people are optimistic about a company's future. And having said that, if you look at the market in general right now, it's actually slightly ahead, again, of where it should be. That's not uncommon. That happens quite often. So if you were to see a 25, 30, 35% decline, that would be normal. And I know that's not what people want to hear. And but I got to tell you, I have to sleep at night. If I were to tell you that what you wanted to hear, knowing that it wasn't true, that's a little tough on my psyche. So I'm just basically here to look at the facts, try to interpret them best I can. And valuations are elevated from where their long-term averages are. However, the growth rates today, this is one thing I'm just flabbergasted that the media is not paying more attention to this, but you've got some major industries spending major amounts of money who employ a major portion of the population and or affect the overall population, and I'm not seeing anything on that. And I shouldn't say anything, but it's because the stuff that I am seeing. It's because I'm Googling for it, and I'm being very specific. But there is a ton of work being done in the grid, and I know you've heard me talk about this before. Doesn't make it any less true, and it's actually starting to accelerate. So if I were a kid, didn't want to go to college, go to vocational school, become an electrician. And you don't actually have to work as an electrician. You could probably get a job with a lot of these companies that are doing a lot of things, a lot of other things that are much more progressive. And it's unbelievable the advancements that they're making in those industries. I can tell you one thing I would not want to do. I would not want to be a technician who's got to work on the windmills. Even when I was younger, I'm not sure I would have liked that. I was never afraid of heights, but thank goodness that somebody's willing to get the training and go up there and do that work. And because it is a lot, it pays very well. And the distribution, the grid, our entire grid needs to be redone. Almost from beginning to end. Almost. I mean, there are a lot of they've been doing a lot of newer work, and they're putting out a lot of new stuff. Okay, that doesn't need to be redone, but inevitably, at some point in time, it's all going to have to be replaced because it wears out. I mean, it does last a very long time, but a lot of this stuff we've been using now. Some of it I've seen in Cleveland, some of the substations that are over 100 years old, and we're still using them. That cannot be efficient. I'm sorry. I am absolutely positive that we've made some sort of progress over the past 100 years. But they're using it because the cost, it's going to be a lot to replace a lot of the aging infrastructure. Never mind the new infrastructure that's needed because population growth is still around 3%. And that's still about 9 or 10 million new mouths to feed every year. Economy has to grow to accommodate that. So I guess the bottom line is that there's both demand and there's supply. And it's a pretty good environment. I'm flabbergasted that it's as good as it is. And how do you take advantage of that in your retirement years and pre-retirement years? Well, there's a company that's been around a little while, and I've just within the past, few months, I've started to use one of their products. And if you're a client of mine and you haven't heard about it, you will it takes time to get to everybody, and it's not like it's going to be a gigantic change, but it's an improvement, and it's relatively minor. But you give it enough time, I think it's got the opportunity to make a pretty big difference. Very similar to the kind of stuff that I had been doing a long time ago. There was a firm called Folio. Now Goldman Sachs bought that firm out, and there were some models in there that I like to run, and they did very well. The problem was that you got to see all the transactions, all the little tiny transactions that are going on when you're rebalancing a portfolio. And it's incidentally, it's mostly math. The S&P 500 is 100% math. There's literally no judgment made. I shouldn't say that. It's a super tiny bit of judgment that's made. But the way that they select the stocks are basically size and speed. We want the biggest 500 stocks that are going up the fastest. Now, they won't tell you that, and they won't speak in that language. They like to use 3 and 4 syllable words, and namely capitalization. I'm not even sure how many syllables is in that word, but the capitalization is a measure of size and speed at the same time, it's pretty cool. Next seminar I do, we're going to do one here this fall. Next seminar I do, we'll look into that in a big way because it's a big deal. You've got several thousand exchange-traded funds now, and everybody, a lot of people I talk to think that, that's all you need to know. Hey, which one's done the best? Well, the ones that have done the best right now are taking the most risk, because a lot of those exchange-traded funds are using leverage. In other words, they're borrowing money to buy stocks, and it's great when the market's going up. When the market's going down, look out. Those are the ones that drop like a rock. So not something I really want to do, I guess, with my retirement money. But if I could take and this is the model that I'm working on, that I'm going to roll out to the general public. If I could take the Russell 1000, and are the top one. It's the S&P 500, which are the top 500 stocks, plus the next 500. Okay, so if I take that whole group, and actually, you can do this with the S&P 1500. You can do it with the Russell 3000. Doesn't really matter. But if you take that group out and you look at the top 40 stocks over the last 6 months, okay, so from today to 6 months ago, which 40 stocks are doing the best? And then you invest in those equally. And then you're going to come back and do this once a month. If it's a taxable account, by the way, all the little transactions, this is one of the advantages that an exchange-traded fund has over other types of investments. When they're doing this rebalancing, and they're doing it on a daily basis, incidentally, all the little transactions, the little buys, little sells that you would normally have to report, they lobbied and Congress took a look at it and said, oh yeah, that's way too much information. The IRS will never be able to get away from just the audit of the fund. So you don't have to, they have an advantage, a tax advantage, the big tax advantage. If you don't sell the fund, you don't have to pay the taxes on all those little gains each year. You don't have to report it. Okay, so that's one of the reasons I thought that it was a great idea from the get-go. This is one of the reasons I started my company, because I saw this coming. And I thought, man, that is really great. You don't have to worry about it. It holds your portfolio back a little bit, not a lot, but just a little bit. And so many people look at funds, incidentally, and figure that, well, the ones that go up the most are the best. Well, they had the best performance over that period. That doesn't mean that that's going to continue that way. And oftentimes, this kind of stuff happens a lot. And maybe one or two sectors end up doing really, really well, and that fund goes to the top. By the way, when I was young, that was me. I had the same ideas. So I'm buying it. As soon as I bought it, that was the death knell. That's when that sector's run was over. And so those funds that were investing in those things would drop like a rock, and I'd be going, "Hey, what's going on here?" And by the way, we didn't have the tools we have today. That's one of the reasons I got tricked all the time. And I was investing in the money to get those tools way before anybody I know in the business. And I've been around for quite a long time, and I just wanted to know. I mean, it's like, hey, I got stung here. Why did I get stung? How did I get stung? How do I avoid getting stung again? I don't want to just keep repeating every mistake you could possibly make. And so it was very expensive. I'll just put it that way. And then the stuff that actually works very well is relatively simple from a intellectual standpoint. I mean, you don't have to be a rocket scientist to understand what works really well and how it works. You'd have to spend a boatload of cash to be able to prove this stuff because that software and the data is not inexpensive. Anyway, if you decided that you're a nut like I am and you're going to spend that money because you just don't like getting beat, you're going to find out what it is. And so if I took the S&P 1500, that's the S&P 500, that's their large cap, and their mid cap, and their small cap, you put them together. I said, okay, I just want to take the top 40 over the past 6 months. And I'm going to look at this on a quarterly basis, or a monthly basis, it's actually better. But I'm going to actually have to pause here for a real quick commercial break. I'm sorry about that. We'll pick up this topic as soon as we come back from these commercial messages. This is Bill Bullington right here on 1420. Stay tuned because I will be right back.
Bob Brantz here, and if you are dealing with a leaky roof, we should probably take care of that sooner rather than later, don't you think? Quick call to Sky Roofing will get it done, 440-349-6750. Look, there are a lot of roofing companies out there that want your business, but this isn't something you want to trust to a fly-by-night company. Sky Roofing is in it to stay. They've been serving Ohio homeowners like you and me for 24 years. That means they're doing it right by the roofs they repair, the roofs they replace, and the people that they serve. The pros at Sky Roofing have pledged to treat your roof like it was one of their own homes. So if your roof is in disrepair, maybe you've got some gaps in the shingles, call Sky Roofing. And if your roof has been good to you, but it's just that time that all homeowners face and you have to replace it, call Sky Roofing. Check out their work and the testimonials at the user-friendly website skyroofinginc.com. Then make that call, 440-349-6750. Call today, get a great quote, and treat your roof the way you need your roof to treat you. Sky Roofing is roofing done right.
Tchaikovsky's Pathetique Symphony, profound and passionate. The Cleveland Orchestra and music director Franz Welser-Möst kick off a new season with Tchaikovsky's epic Final Symphony. Expect the extraordinary. September 19th and 22nd at Severance Music Center. Tickets at clevelandorchestra.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. Yeah, we've been talking about a few things here. I got to tell you, looking at the opportunities that are available, I was never a big fan of market cap weighted indexing, even though it does do extremely well if you give it enough time. I just didn't like how volatile it was. And when you're looking at stocks just based on size and speed, and it doesn't pay any attention to how much in sales you're doing, how much in profits you're generating, well, it's a lot like gambling. And, casinos do extremely well because they're, holding all the cards. But the mutual fund companies can do very well because, they're promoting these types of products. But if you want a little edge, if you want to come in knowing that the odds are in your favor, you can do some other things like measure how much in sales companies doing and try to calculate the cash flow and how much cash they're generating per sale, so how profitable the business is, and start to use that kind of stuff in addition to some of the other items like size and speed to select the stocks. And I always thought that was a no-brainer. That inevitably, eventually, somebody's going to figure that out, and there will be funds out there. In the meantime, I put my own together while I was waiting, and it took a lot longer than I thought it would. They're here now, and they're starting to bring out and make improvements on some of those models, which is really important because when you're getting close to retirement, you really want to try to minimize the surprises, the surprise factor. Yeah, all stocks are extremely volatile. They're going to fluctuate a lot. But I have a much bigger peace of mind when I know that the companies that I'm investing in have sales. And I'm laughing about that because I've been around for so long. I've seen so many companies just fly before they'd ever produced a dime of profit. And many companies, stock prices went up just on the anticipation of making future sales. They hadn't even sold anything yet. So, that just never sat well with me. That is actually gambling. So investing and gambling have a lot of similarities, but the biggest difference is when you're an investor, you want to look at things like, hey, what are these companies making? How much did they have in profits last year? How much of that did they get to keep after they paid all their expenses and taxes? And now how much am I paying for that for every dollar's worth of profit? What am I paying? Well, fortunately, that's here. I've actually got I spend a fortune just on research to look up a lot of these stocks, and now there's some other companies out there that are actually putting them together, putting models like that together. So if you're approaching retirement, these are better than a lot of the ETFs out there, especially the ones that have just gone up a lot. If you don't know what they're holding, then I feel bad because I've never seen that end well. And you just hang around long enough, and it's just tough. Very, very difficult way. What I would rather see is companies that are putting together funds that are looking at other variables just other than just size and speed. The profitability, that's a big one. And I can't tell you how the measuring of how much profit a company is making when you incorporate that into the strategy that you're using in the long run, that really makes a big difference. In the short run, your guess is as good as anybody's. I mean, to try to figure out which stocks are going to go up over the next 12 months, I would just give that up. I have. I don't even look. And even when I do some trading, which is very rare anymore, I'm not considering that kind of stuff. It's a whole different ballgame. But anyway, so the good news is that there are products out there that are doing this sort of thing. And yes, if you still want to hold the individual stocks, I get it. If you're holding the top 40 out of the top 100, you're probably going to have better performance. You'll also have more volatility. It's going to fluctuate more. The fewer stocks you hold, the bigger the fluctuation is typically, even with looking for those companies that have super high cash flow generation, because they're still stocks and you're not holding quite as many. The more stocks you hold, it smooths out the volatility, because the chances of all of them moving at the exact same time in the exact same direction are nearly zero. Okay, so that's what people like about exchange traded funds. You're holding a lot of stocks in there. I like the ones that are growth oriented. Why? Because if you look at any of them, look at the small cap, look at the mid cap, look at the large cap, look at the international, look at the emerging market. You take those same funds and eliminate the companies that don't have sales or profits, and the returns go up. Now, some of them don't have funds that represent that category I just described. More of them do today than ever in the history of our financial market. And I know at some point in time they will begin to roll out better funds, improved funds for emerging markets, international markets as well. So companies like Pacer are going to be pushing that narrative big time. And I'm not even sure if it's worth having the individual stocks. I've just been doing it for so long that it's just a habit, and it's not 100% of my money. It's not even close. And but I like doing it, and it's kind of fun to watch because some of those suckers fly. Not too fun of the ones that crash, but it's interesting. And what's really interesting is when you see the papers, or you're reading, whether it's Google. I think Google's my number one source of information now. But I still read the Wall Street Journal. I still get the paper version of it as well as the online version. And the online's really cool because I could access that anywhere. So I just take my laptop, open it up in a hotel room, and I'm still connected. It's just mind-boggling. I can't tell you how mind-boggling that is, because I was a traveling salesman at one point in time in my lifetime. I was very young, but boy, we didn't have anything near what we have today. It was we were using Rolodexes in our cars, So that is hilarious. But man, we come a long way, and boy, does that make me feel old. But not really. I mean, I'm looking forward to it. I look at pictures of people like my grandparents when they were my age, and holy cow, that's another thing that's changed. You look around the generations today, you're in your 50s or 60s, you look like those people did in their 40s. and by the time they were our age, they look a lot like 80-year-olds today do. So that's I haven't seen anything published on that, by the way. That would be an interesting study. But again, things have changed quite a bit. There have been some great developments that have been going on. I really like the ETFs, and I like stocks too. And like I said, I'm working on rolling this model out. It's probably going to take me another couple months because there's a lot of you don't want to roll out product too soon. That could be just not good, in any way, shape, or form. So, kind of working as hard as I can on it, and we'll have it. I should have it ready in the next few weeks. So, and essentially, it's just kind of common sense. I mean, if you were, when you go to, or you watch the races, horse races, there's a win, place, and show. It's basically the top three. And I don't know anything about horse racing, by the way, other than what I've seen on sports shows, and it's not a lot. But if I were to make a comparison, I'm watching the horses coming around the track, and if I were allowed to make bets, say every quarter length of the track, I would put my money on the top three horses, and if any of those three fell back when it came to that next quarter where I was allowed to change it, I would change it to the new top three. Doesn't that make sense? I mean, if you can find a horse track that'll do that, let me know. But as far as I know, they'll never exist. But you can do that with the stock market. And you can do this through a fund. You can find funds that are actually doing that, or you can just pick the individual stocks and hold the stock portfolios. Your advantage with doing it yourself is that you don't have to hold as many stocks as the fund is required to hold. The fewer stocks you hold, the bigger edge you typically have. Because you're not holding, if instead of holding the top 100, I'm only holding the top 40. That means I'm taking the bottom 60 and kicking them out. Okay, so your results should be over a long time period. They should be better, and in most cases they are. Very rarely have I seen a back test where that hasn't helped, but it could take a long time. Then this is the reason that not everybody's a billionaire today, because you can be doing the exact right things, and you can be underperforming sometimes for 4 or 5 years in a row. That's rough. I've never tested a single solitary model, and I've tested millions by now. I've never tested any of them that had better long-term performance, that didn't lag what a generic index might do that's comparable to what you're trying to do with that, for at least 3 or 4 years at some point in time. Almost just long enough to make you doubt that you did the right thing. Fortunately, it's normally not that much. It can be irritating, and it's irritating enough to get an awful lot of people to quit or go do something else. And that's one of the reasons that it's really important that you have other items in your portfolio other than just stocks. Right now, you can CDs, bonds. There's a bond fund I really like because the average maturity of the bonds is about a year. The current yield and the yield to the SEC yield, which is the complicated thing, is higher than most CDs are. There's a reason for that. The fund family that runs that fund is huge. They're in the top 3 in the entire world. So they can get deals that you and I are not going to be able to see on our own. And they're the ones that are taking care of it. I don't have to worry about making adjustments. So I love to use that fund for my fixed income, a large portion of my fixed income portion. Now, as I've gotten older, I've been putting more money into annuities because I don't want to guess at what I'm going to have to live on come retirement time. And annuities follow very specific guidelines. You know what the guaranteed minimums are. And so it's really just about knowing that I'm going to have a certain amount of money coming in from a certain portion of my assets. And everybody is different there. That's one of the things I find fascinating about having been doing this radio show for so long and watching other shows and watching the news, is that everybody's got an opinion, and there are tons and tons of differing opinions. And so I can't sit here and tell you, yeah, this is a one-stop shop, this one-size-fits-all, it'll take care of all your needs. No, the world doesn't work like that. Life doesn't work like that. So you really have to know what it is you want to do, what kind of goals you have, what kind of risk taker you are really. I mean, I learned the hard way over the years, over my career spanning back, I hate to admit it, but it's more than 30 years. It's actually closer to 40. But over that time period, you get an awful lot of people that say, yeah, I want that return. And then, okay, that's going to have this type of risk. And if you had done this in 1972 and 1973, you'd wish you'd never even heard of the stock market. Or if you'd done it, August of 1987, right before the market dropped, 20% a day later that year. August was the peak of that year. But by the way, if you started at the beginning of the year and closed your eyes and opened them up on December 31st, you wouldn't have noticed too much. It was only off by a couple percent or so. But it had gone way up, and then it had come way down, and then it had started to recover. A lot of volatility that year, mind-boggling. And that's when they were first trying to incorporate computers into the stock market, executing trades. It caused a lot of excess volatility. So that can still happen, by the way. That can absolutely still happen. And we get these little mini crashes every once in a while. They've gotten a lot better at putting the brakes on in the past, probably 10 years. In other words, if the market starts moving too fast in one direction, they'll actually, the computers have algorithms that will slow down the number of transactions that are going through, let people kind of sit back and review maybe what they're doing. And it's constantly changing, incidentally. I didn't think I'd ever have to study as hard as I do now, but at any rate, I got to take a real quick commercial break. When we come back, I'm going to talk more about these newer ETFs that have shown up on the scene, and we'll hit the fixed or guaranteed income products a little bit more. And you can call us 216-901-0945 if you'd like to. I'm going to take a real quick commercial break, and I'll be back after these messages.
You made the rain, so when it falls on me, should I complain? Or feel you calling me, it's all on me to stay. And really catch what you're showing. It's my roots that you're growing, cause life is more than this moment. You are the light.
We had water seeping up the drain in the basement, and that's always alarming.
She says, why don't we call Wyatt Works? And I was like, oh yeah, that's those whistling plumbers.
Everything was top-notch professional, but friendly and personal. And I liked that. I think women tend to like that in a different way than men, but we both appreciated all of that.
Being an old guy, I'm impressed with young men who can present themselves like that.
I got to tell you, the one line from your ads that sticks with me is, I'd rather starve than do business that way. And then when your men came to our house and did that work, I could tell that was not just a line on an ad. That was what they really mean.
You guys lived up to your advertising.
They are men of a higher caliber. Definitely. Definitely.
Consider it done at WyattWorks.com.
Wallackadoodle.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
I know there's gonna be some brighter days.
And we're back. I've been talking a lot about this one particular company. It's called Pacer ETFs, and I really like them a lot. They're relatively new on the market, and they are going in and looking at growth. That's one of their favorite items to kind of search for, and they've got quite a few different products there. The ones I like are the cash cows. I like those the best. There are some others, and that also have really good track records. And it's kind of similar. That's the thing about today's market. Given the fact that there's slightly over 3,000 stocks that are big enough to be owned by a mutual fund or an exchange traded fund. That means everybody's looking at that same pool of stocks there, and there are literally tens of thousands of funds. Okay? So not paying attention to the price movement of the underlying stocks, in my opinion, it's a mistake. Okay, that's my personal opinion. If you are not paying attention to the price movement, now you as an individual investor are not going to have enough time to pay attention to all the stocks in your portfolio. You just won't. There are too many other people competing, looking, and making changes all the time, every day. Now, having said that, there are still some older, if you wanted to do individual stocks, by all means, I would take a look at any trend following software you see out there. There are only three things that can happen to a stock. It can go up, it can go down, or it can remain unchanged. That's it. And it cracks me up that they spent all this time doing all this extremely expensive math to figure that out. Actually, they haven't figured it out. The forecasting ability is not great when it comes to stocks and stock trading systems and all that stuff. It's actually much simpler. It just takes an enormous amount of time, and you have to know what you're doing. And it's not that complicated, but it's very difficult to stick to it. You get stopped out at 8 out of your 10 last trades. It's a very difficult. I remember, I think back in 2008, which is forever ago, I had an unbelievable number of trades because I was doing this I was doing it a lot more, and I was following it was a rules-based system. I had done very well, even despite the fact that the market was down a ton. I was down less than half that amount, and then I made it back up lickety split. But I was losing money on 9 out of 10 trades. That's how bad the market was. How do you lose money on 9 out of 10 trades and don't lose your shirt? Okay. That is the secret to trading. It's not picking the winning trades. Everybody thinks it's picking the winning trades. You're wrong. It's not losing a lot of money on the ones that you're going to be losing on, and you're probably going to lose more on more than you'll win on. And that is psychologically, that's really hard. It's kind of like a major league baseball player. Gets up to bat 10 times. If he successfully gets on base 3 out of those 10, you know what they call him? A future Hall of Famer. And so it's very similar. I mean, baseball always, and I'd never played baseball, but I was always fascinated when I started studying about managing money and how similar this was to the game of baseball. And so that's one of the reasons that, with an exchange-traded fund, so you can't see what's happening. And I promise you, not being able to see is a kind of like not being able to see the sausage being made. If people watch them make sausage, it would probably go away as a as a product. And so if you want to look inside, be prepared. And you don't really have to do that much anymore. There are companies out there that are starting to incorporate the things. I just can't believe how long it's taken. But I'm glad they're here now. And you get a 5-year track record. The last 5 years been pretty rough. I mean, you look at the S&P 500; it's been all over the place. And so if you've got a good track record over the last 5 years, then great. You should be taking a look at that. Yeah, let's see. Let's go back 5 years ago. We're here. So over the last 5 years, let's see. Okay. Market's up a total of 44%. 44% over 5 years, not horrible, but if you go look at the last quarter of 2021, market went down about a little over 25%, close to a little over 30% actually from peak to trough, and it took over 2 years to recover. So there's a period from November of 2021 all the way to first quarter in 2024 where you were down almost 30%, and it took you that long just to get back to break even. So stocks are not, this is my point. I still see people all the time. You see the ads, they're all over Facebook and other financial websites, and they're if they're not telling you what I just told you, they're probably trying to sell you something. That's the bottom line. And they just leave out an awful lot of facts. Investing is hard. It's not easy, but intellectually, it can be pretty simple. And that's another reason I like the comparison to baseball. Baseball's relatively simple. The pitcher throws the ball, the batter tries to hit it. Pretty simple, right? Yeah. Stand in there while a 90-mile-an-hour fastball comes right to your head. That's where it gets tough. Okay? So and that's a lot like trading. It's relatively simple. You're going to buy stuff that you hope it's going to go up one day. If you're a value investor, you don't even look at the price movement. If you are a trend follower, you're going to be looking for trends. And I'm not a big fan of shorter-term trading than that. My trades last an average of several weeks to several months. Depends on how well the stock does when I'm trading. And I don't advocate short-term trading under any circumstances. And when you look at investing and longer-term trading, which are two of the easier methods of being in the stock market, you're going to see why the annuities are so popular. Because they have no risk. Well, it's got the risk of the insurance company still being there. So you want to make sure you're picking, at least A-rated companies and have been around for quite a while. So they've got some experience. Anyway, my favorite is it's Nationwide. Why? Because they've been around for a really long time, and they got really high ratings, and they don't overpromise. I started out with an insurance company in my entry into this career, and that insurance company actually went belly up. And for their benefit, though, that they actually went belly up because they were trying to make good on promises that they had made, and they overpromised. So, and they tried to stand behind those contracts. It ended up causing that firm to have to be broken up and sold into several different companies. So, bottom line is, and is that a risk with? That's a risk with any insurance company, incidentally. So that's why you want to look at the ratings, try to get a feel for what the company's doing anyway. So I like Nationwide. I think they do a really good job and have for a very long time period. And if you want to get a copy of this, there's a link that I can send you. I can email it to you, and you can put your own age in there and see what kind of incomes you might be able to qualify for. And you don't have to qualify based on health, by the way. They will actually give you these types of products without looking at your health. It's not like life insurance. And I was just looking at, at age 70, somebody that came in at age 69, by the way. You wait for 12 months, then you can turn the income on. So if you came in at 69, put in your $100,000, age 70 comes along, you get $8,256 if you wanted to turn on the lifetime income, and that's guaranteed for as long as you live. $8,256, that's a lot. In today's interest rate environment, that's a really good rate. And that's guaranteed until you pass away. Now, unlike a lot of other annuities, and this is one of the other reasons I choose this one, there are a few of them that have a slightly higher payout, but this one will pay out whatever money is left. It's invested, so the investment's going to fluctuate, but they guarantee that, first of all, your beneficiaries will not get back less than you paid in. So if something happened, the stock market crashed, and you had a heart attack and passed away, okay, they would take a look at how much you put into it versus how much. If you haven't taken anything out, well, that's the worst case scenario. That's what your beneficiaries are going to get. They're going to get the amounts that you invested, even if the market has dropped and has been cut in half. No, that's a pretty big deal. And actually, it's got a guaranteed schedule that it will go up each year. I think it's only 4%, but that's still a lot. I mean, when you think about it, if we had a really, really, really bad stock market that stayed down for a long time period, as kind of the way the 1970s was, then your family would get at least what you started with. That's the worst case scenario, plus a small increase. I think it's 4% now. I'll have to double check on that. So, and if I want to turn the income on, I can turn it on for as long as I live, and they will still keep tracking my cost basis in that, because if your family's going to get minimally what you put into it, even if you spent more than, 30-40%, they would, and if the market corrected and dropped by more than 30 or 40%, they're still going to take a look at that and say, okay, if I started with $100,000 and I've only taken out $16,000, the worst case scenario for my kids is $84,000. If the investment grows on top of what you've taken out, that's what they would get. I'm going to tell you that that's just not that likely. But if it did happen, and I know it's happened before, multiple times. In fact, I saw it happen once in my career. It was crazy. There was a big correction. I had people that had an annual increase. It took a look at the account value on an annual basis. And if it was higher than what you started with, that was the new guarantee. And the market crashed in 2000. And one of my bigger clients passed away, actually, and they made his family whole. That thing was down by a lot, and they paid back all that money. Anyway, I got about 5 seconds here. If you've heard anything you'd like to talk about, just feel free to reach out to me on my website, bullingtoncapital.com, or you can call us 330-664-0700. Anyway, I apologize for talking so fast today, but I had to get a lot in a short time period, and hope you guys tune in back here again next week. It's 11 o'clock, 14:20. Have a good weekend, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.